All right, sorry guys. I had everybody hear me okay? All right, yeah, sorry about that. Had some technical difficulties there. My bad there. All right, so yeah, I'm just going to go through a few things with the market here, and then I will get to our swing trades a little bit, and then we'll do Q&A. So again, I talked about this on Twitter a little bit today. The scenarios right now that we're seeing are, or really the trading pattern that we're seeing from this year to last year is so similar that it's actually suspicious, to the point where it's almost as if someone wants us to kind of see this. So we're looking at, so we have this bottom in March, a little bit of a melt up, some micro blow off in April, May, double bottom, melt up, then a little bit of sideways into OPEX, and then a blow off top. And it's kind of the same exact thing here. So March low, a little bit of a melt up, double bottom after a pullback, and then another little melt up. And now maybe we go sideways here. We kind of went sideways-ish lately into OPEX. And if you notice, every single OPEX we dip into, pretty much every one over the last 4 or 5 months. And it's just strange. It's just very strange. It looks very forced. It looks like algos are doing a lot of the work. But it makes me nervous. Typically, when we have these 1-year anniversaries where you're having a trading pattern exactly the same way, they typically don't tend to play out. Case in point, last February, March. So we had this big melt up, dip, rolling top after making a new all-time high, and then a dump. And this year, we kind of had the same thing. So we had this melt up, dip, rolling top in February, and then a bottom in March, but it was not anywhere close to what we had last year, obviously. So that makes me a little bit nervous. I think this market might hold up a little longer, but we're just going to take it one day at a time. We're in an uptrend, and we'll just respect it. Now, the scenarios I see here, potentially if we dip into OPEX again, they'll probably buy the 50 moving average like they always do. Then what we want to look for is, does it make a lower high, or does it make a new all-time high? If it makes a lower high, that could tell you something like the top is possibly in. So that's something we're going to watch for. Or maybe we just blow off straight up, and then we'll reevaluate that. But as far as cycles, I don't have any cycle dates right now. I have one for possibly the middle of September, but I'm working on that. I will work on some more numbers later on to see if I can come up with something sooner. But the cycles we've had obviously have played out. We just couldn't get more than 3% or so on the downside. So we're hitting the timing right, but the liquidity is just keeping the market up for now. So let's take a look. Oh, and by the way, so today with this gap down, I mean, this was an obvious bear trap. They're talking about the Afghanistan and Taliban, all this stuff. If that was going to happen, if we were actually going to sell the news on that, it would have started last week. We would have already sold off last week, and then today would have been follow through. But obviously the market was concerned. We had the Qs. The yields were down a little bit today. So the dip buyers came in early on the Qs, and then they got flushed out. As soon as these guys got stopped out, it created a bit of a waterfall. And then obviously the dip was bought once we found a little bit better support there. But yeah, so day traders got hit a little bit there this morning. And notice the volume as well. A lot higher volume on the selling, and then a float up on light volume. So could be a little bit of distribution, but it's hard to make too much out of it because this market's just held up through pretty much everything. So we don't want to make too much out of it yet, but we'll just keep monitoring it. IWM a little bit lower, again showing weakness. IWM represents risk tolerance. So when the IWM's lagging and the Dow is leading, the Dow is held up by a lot of healthcare names today. UNH was up about 2%. So Dow's leading, and generally you don't want to see that in a bull market, but IWM softer, KRE, which a lot of regional banks in IWM, again, soft as well with the lower yield. So risk tolerance may be drying up just a little bit here, but Yeah, so just noticing that. Also semis. So I posted this on Twitter a little while ago. So I talked last week. I don't remember the last time we had 6 straight days down in the semiconductors, but that should have been a good buy signal for this previous all-time high. So we had this pivot here, and 20 moving average support really. But yeah, so that should have given us a nice lift today, and this is looking really dead cattish. They should have had a robust move, a robust bounce off of the 20 MA and this previous pivot here, and we haven't gotten anything. Now this could be OPEX games. They might just pin it to 260 until Friday, and then it might run higher. But right now, the fact that the semis aren't bouncing more is a little concerning. So we're definitely going to keep an eye on that, because that could be telling us something. If the semis go down, everything's going down. Just keep that in mind. Dollar index is kind of hanging in there, sold off Friday. Just a bit of a pause day. May want to come back down and test this 50 MA, possibly this lower trend line. But again, like I was saying last week, if it makes a higher low, it probably wants to attack this pivot and probably wants to go higher. So just keep an eye on that. Gold, got to talk about gold. So gold, impressive day today. This is pretty much exactly what you want to see. Now, what we need to look for next is, does it pull back, and does it pull back sharply, or does it start to go sideways? I mean, it can pull back a little bit, but you want to see it kind of hold this 1760 handle. And if it does that, it's telling you it wants to consolidate to move higher. So keep an eye on that. The only problem I have right now with gold is the GDX. GDX is not doing anything. We want to see the gold miners lead, and this is looking really flaggish. So you have sharp move down, and now it's consolidating bearish. So be careful for that. Again, OPEX Friday, so anything can happen, but I want to see the miners do a little bit more here. And as far as silver is concerned, again, same thing as last week. It's holding up okay. Less of a bounce than gold is getting, but it was also less oversold. But again, with silver, we'll just look for pattern here. By the way, bonds. So the yield filled this gap today, or just about, basically kissed it. So that's probably why gold stalled out at the 20 MA. And we'll see if yields get a little bit of bounce here, but if they head lower, gold's going to have a little bit of tailwind. So just keep that in mind. So, all right, let's take one more look here. I just want to show you guys one thing before we get into our swing trades. So this is the skew index versus the SPY. And basically, you can see these divergences have all played out pretty well. So the flat skew trade has been basically shrugged off, but each time there's a divergence, a negative divergence, it spells trouble for the market. So keep that in mind. But that's an interesting chart. Just kind of wanted to show that to you guys. So that's something to monitor. As far as our swing trades, so I picked up some puts on Walmart today, just before the close. Now these are lotto plays. Like I'm literally using like nothing. Like this is just it's fun, like casino money, basically. But essentially what you have here is the potential for a similar trade as what we had in Zoom. So we had these 3 tail candles here, and right into resistance. We're overbought and extended. And I can show you here, my guy Laser pointed this out to me. Look at the Walton family. What have they been doing since the Q2 earnings? That's a lot of selling. That's a lot. There's $1 billion right there in just that one block. So, and that's probably why Walmart dipped a little bit towards the end of June. But so extended into earnings, but I'm not playing it with a full short position because there's too much risk. I mean, it could gap up to 160 for all we know. But I played it with puts, basically lotto money for this Friday. If it plays out, yeah, it could make like 200-300%. If not, who cares? It's basically a lotto position. So that's what the thought process was there. As far as our other trades, Peloton, just hanging in there. I like what this did today, believe it or not. So it was down 0.75%, but you held this inside bar low on a closing basis, and that's all that really matters. It's also a weekly chart pattern that we're trading this off of. So again, it's holding up fine. Nothing really doing there. Budweiser, again, flat today. Had a nice little pop on Friday, but just kind of hanging in there. And then our last play, so Snowflake, we took profits on half of this. This is in the money, a little bit of a pullback. It's a little bit overbought going into OPEX, so it wouldn't surprise me to see it go sideways or pull back here. I have an in the money stop on a close below 270. And the reason for that is the hourly time frame kind of have this. You can see it a little bit better here. So you see these pivots here and this pivot and this consolidation. If we close below that, I have no problem stopping out. So that would give me about 6% on both halves. But as of right now, nothing wrong with Snowflake. It's still holding trend. It's still holding up really well. I think that's about all I wanted to cover. Moderna came back in again today, though I found a little bit of support at 350, so no surprise it got a bit of a bounce, but this thing was just crazy extended. I told you guys, this thing was, it's a matter of times, ticking time bomb. Just like some of these investment banks, Goldman Sachs, when you see charts do this, it's usually the end of the move. Morgan Stanley, absolute tank. I remember buying calls on this last October, and I thought 100% gain on that was good. I wish I had held them. I had made a fortune, but yeah, some of these names are just getting crazy. And there's terrible breadth in the market, as we can see with the skew index. We can see pretty much stocks over, percent of stocks over their 50-day moving average is very weak. But yeah, overall, you guys know the drill, and I guess we can get into some questions here. Crocs, yeah, Crocs is absolutely insane. That's another one. This is ridiculous. So what do you say in 125? Yeah, the thing with this is I thought it was extended here and it really didn't do much. I mean, I guess on a weekly basis you could have made money on this, but I think Kevin, you did a good job with that mRNA put though. Yeah, I think puts are the way to play these parabolic charts because you know your downside risk. Whereas if you're just shorting it, I mean, it could continue going up and going up. But if you're buying puts, you're usually using a smaller position and you're keeping your risk limited. But yeah, this thing is just ridiculous. Speaking of my sarcasm, if you guys saw the tweet on Crocs about them buying Nike, that was a joke. And the VIX, yeah, so VIX, getting a little bit of a bounce today. VXX was really got hit over the last 2 weeks. And that's to be expected in August because there's not a lot of participation. So the VXX tracks short-term volatility more than anything. Remember that? So with a really light, dull market, you know, VXX is going to underperform the actual VIX. But I still have another leg down in the VIX penciled in. It's lower than 15.5. I'll say that. It's lower than, what was it? It's lower than 15. I'll tell you that much. Let's take a look at DD at Diller. Yeah, a lot of these, like Penn was another one. A lot of people said, oh, you can't bet against, you can't bet against it. It's too, it's too strong. And I mean, it came back in. Look at all the SPACs that came back in. But yeah, I mean, like some of these names, Dillard's, Deere, like, come back a little bit. Look at like Tractor Supply Co. I mean, it's a nice company and everything, but like, what are they opening up, like 10,000 stores next month or something? I mean, this is ridiculous. But that just goes to show you that it's about liquidity now, and the money has to find a home. But eventually, I mean, the Fed almost lost control of rates in 2018, so they're playing a delicate game here. They know that the market is extended and in a bubble, but they know that if they pull any liquidity, literally, that the amount of the leverage short vol will blow up in their face. And that's why you see the VIX, and I talked about this before, that's why you see the VIX up 30, 40% in 2 days when the market is down 1%. Yeah, I think got everything covered pretty well. If anybody has any questions, just type them in and I'll answer. If not, I can get going a little early here. Sorry about being late again. I had some technical difficulties here with the microphone, so. Yeah, it's certainly possible. 470, I mean, see if we use a weekly here. Oh, just bear with me 1 second. I don't know if we have another 10% though in this market, honestly. And notice this trend line here. We've really backed off of it. So 460, that looks like a really sweet spot for me. So notice how this trend line is upsloping, and we're kind of just like in the middle of this range. In fact, if you just kind of, you could probably do something like, if you want to cheat a little bit, you could do something like this. You see we have like kind of parallel lines-ish. You notice how we're kind of in the middle of this range. I think, yeah, a bull off top could take us up to this upper range, especially if we just kind of go sideways for OPEX, or maybe we even go up and then dip into OPEX and then back up. So I think 460 is probably there, but 470 would be a bit of a stretch. I don't know. That's quite a bit. That's another 10% from where we are now, but it's possible. I mean, as long as this thing remains in an uptrend, it's certainly possible. Yeah, the holiday trade. I've done that before. 4th of July, Thanksgiving's always an easy. I remember one year I bought. It was like Christmas Eve or something, or like December 23rd. The markets were closed the next day. I remember buying like weekly calls on like Apple at 3:30, and they just like floated it right. I was like the easiest money ever. But yeah, sometimes those holiday trades are just, they're really boring, but if you look for the right things, you can make some easy money there. I have no idea if the next crash will take the banks out. That's like way beyond like my skill level. I mean, I'm I understand macro and whatnot and banking a little bit, but I mean, the Fed will backstop their losses, so it's just a matter of, and I think people are saying like the Fed can't raise rates. They can't raise rates. They can if they sort of tip the banks off that they're going to do it. So give them time to get up, like at least hedge their positions to allow for an actual correction to happen without completely ruining, without ruining the investment banks. But I haven't decided when I'm going to do the trading course. I kind of I want to have a little bit more of a following first. Just because I don't want to do it for like 5 people. But I'm definitely working on it. Like I haven't forgot about it. So maybe when I get to like 500 or 1,000 subs, the channel's growing really well. So thank you to everybody who's been sharing and liking and commenting, because when I started doing this again a couple months ago, I think I had like 15 subscribers. I wasn't really posting on here. But I started working with Jason again, and yeah, now we're up to almost 370. So just in a few months, so we're getting there. And as far as jets, Yeah, this had a nice bounce off of support here. Let's take a look here. Yeah, Jets is tough. It looks, you know what it looks like right now? It looks just like the IWM. It looks just like XLE. See how it's following the same pattern? XLE, IWM, this little low, and then this kind of, then rolling over a little bit. KRE. Oh, KRE is a little bit stronger, but yeah, the Jets might have lower to go, but I will tell you that this right here is a monster level at about 19, 17, and this is a monster level too at about 18. So you see this gap fill here, and right here, this is a huge level. If the market flushes lower, like this is where I'd be looking to buy Jets for sure. Those are monster levels. Yeah, I mean, maybe with Jackson. So I think Jackson Hole, I'm starting to think that Jackson Hole, like the Fed's not going to say anything that's going to like really spook the market. I mean, although they've been hinting at things because that's how they do things. They like to prepare people for it. But I think that maybe it's Jackson Hole, and then after a few weeks, the market digests what's going on, and then we run into some trouble. But I do think yields probably put in a low in August. Maybe in a little bit into September, but again, this is still holding up really well. Again, oops, we're gonna look at the monthly here. Sharp move down, 4 months, sharp move down, or sharp move up, 4 months. If we hit this 618, like I will like absolutely get into TBT. So just so you know, but I've been really patient on this, on the yield play. Bitcoin, I don't know if you saw my video over the weekend on Bitcoin. Let me see if I can, oh, give me 1 second here. I'm just going to pull it up on TradingView because it's a little bit more accurate. Okay. Yeah, so Bitcoin, I could see it getting up to 50,000, maybe 55. So we have this, we had this kind of head and shoulders MA pattern. Here's your neckline. And it's not uncommon for this to be back tested. Also, you notice where the 618 is? It's right about 51,000. So if it trades up in that range, yeah, it could be some type of just a what you call counter trend rally. Sorry, and sentiment on Bitcoin is so bullish right now. So I'm a little nervous about it. I'm not. I mean, I have no position in this right now, so it doesn't really make a difference to me. But that's just what I'm seeing. So if you're trading it, that's just my analysis. And yeah, the Jets are going to correlate with XLF. They're going to correlate with yields, you know. And I mean, the airlines are basically zombie companies, so they're basically just dependent on what the yield does at this point. But I do like what Boeing is doing a little bit here. You had a nice reversal here. But again, coming in to back test this trend line. But if it puts in a higher low, it could attack these highs. Oh, by the way, Tesla today. Yeah, I pointed this out earlier. So this little channel here, just watch this channel. We had a bull flag forming, and then that potentially failed today. So when it's consolidating this way, it's telling you it wants to go up and attack 780 perhaps. But if this breaks down, watch out, because Tesla will be vulnerable if this breaks down. But I don't think it does during OPEX week. ARK a little bit soft today too. Again, that's mainly because of Tesla, but notice this here, move down. You have this little kind of trend line here that's, you know, breaking down there. So some of these higher risk names are a little bit vulnerable here. Oh, by the way, Apple, speaking of fake breakouts, uh, Apple was pumped really hard today. And I talked about this last month, remember? I said, because Apple gapped up into OpEx week. I said, watch out. They might rip this thing back down. And that's exactly what they did. So they're closed. So, and everybody sees this wedge. I mean, it's obvious. So I always I don't trust a breakout on a Monday of OpEx week because that's just shadiness there. So it wouldn't surprise me if that gets ripped back down. Same thing, Microsoft, same thing. I mean, little consolidation here, popped all-time high. Would not surprise me if they dropped it back down. Google's still holding up though. We talked about Goldman and Morgan Stanley. Like, this is the king of overbought absurdity though, to me. Because this is just the most insane chart. Nvidia was really bad too. I mean, this is ridiculous. But yeah, FANG holding up all right today. Particularly Facebook. Yeah, Facebook holding trend. Nothing really going on there. Now Netflix is a little sketchy. I don't like this move down and then the consolidation sideways, but again, it's basically done nothing for the last year, so I don't get too much out of that. Yeah, I think Burry's going to get paid. Thank you, Charles. Take care. Tesla, the only reason they added Tesla to the market, or the S&P 500, so they could manipulate it more easily. It's just one more tool for them. You know, if they want the market up, but they want to sell off Apple, they'll just bid Tesla, or, you know, or if they want the market lower, but they want to buy Microsoft, they'll sell Tesla. So Tesla's a great tool for them to manipulate the markets with. But yeah, I think Burry's going to get paid on that. Again, like, PEs, we guys were talking earlier about PEs. They don't matter right now, but they will. They will eventually. They always do. You know, people were saying PEs don't matter in 2000. They were saying that there's no risk in owning a home in 2006 because housing prices always go up. And now they're saying there's no risk in the market because the Fed will just always be there. And nothing will change, and you just always buy the dip. But the only reason I'm even bringing this up, and I understand that people have been saying this for years, that it can change, is that you see these parabolic moves. This is the only time during this 13-year bull market where we've gone this parabolic. And it's also the only time where retail is involved as much as they are. So that's why I'm saying there's a potential for an actual bear. But, you know, I'm not saying like go out and put everything you got into short, but in shorting the market, but I'm definitely ringing the bells to people to be careful. But yeah, ARK. By the way, has anybody heard from Chamath lately? The SPAC king? All those SPACs have gotten in that. And, you know, I've been talking about this year being a potential bear year. Pretty much everything has gone into a bear this year except for, you know, FANG and like the major indexes. I mean, look at, I mean, IWM has gone sideways for months. You've got like, you know, Tesla, we just talked about. That's come down tremendously. You got some of these stuff, FSLY. This was a powerhouse last year. Look at what this has done. Netflix has been sideways. We just talked about that. Plug Power. This thing got annihilated. Like, look at, you know, some of these names that just exploded. There's been bears. I mean, look at the, you know, the Chinese names. Alibaba, just getting bludgeoned all year long. Baidu. So there's been bears everywhere. Just, they're somehow programming the algos to just bid the futures up while they sell off individual names. He's not short ARK anymore, Kevin. I think he's still short Tesla, though. Like, he's looking for that to go down to, like, $50. Like, Burry's basically, like, Burry and Jim Chanos are, like, the last of a dying breed. Like, you can't really... those guys are the type of guys that will short a stock until it's at zero. Like I'm shorting Enron type of stuff. But I mean, Tesla's probably fair valued around like 100 to 150, maybe. But they're if it wasn't for environmental credits, I mean, they would have no earnings. But basically, yeah, but you said he took his money and ran though. But basically, if you're short ARK, you're short Tesla, or if you're short Tesla, you're short ARK essentially. ARK is basically just a little bit lower delta than Tesla. But you also have, but with ARK, you got like Zillow. Again, here's another one that's been in a bear. Zillow, but I mean, this one was ripping last year. But yeah, a lot of those names that were hot last year have not done anything. Oh, Chamath took his money. No, he got smoked. Remember? I mean, maybe he took his money, but I mean, I remember his tweets. He got smoked during this whole thing, and he had all those SPACs that just got decimated. Like QuantumScape. Look at this crap. QuantumScape. What's another, like, well, actually, Snowflake was a SPAC too. I'm along in this name. But look, this thing's gotten crushed. But this has had it, had a nice pattern. I like it. So, it was probably way overvalued up here, but maybe it was a little undervalued, where it is now. Yeah, Clove. By the way, Robinhood, I talked about this a week or two ago. Their IPO was such a flop. They had to pump it after the IPO, and then on the 4th of August, which is this day right here, all the insiders just happened to dump all their shares after the share price doubled, because I mean, I'm sure the SEC will investigate that. Haha, there's my sarcasm. There's my famous sarcasm that I was talking to you guys about, or you guys were talking about. But yeah, talk about getting screwed over. I mean, they pumped the hell out of this. And it's just kind of grinding right back down. It's really into gap fill now. But this name has connections to Citadel, and there is a lot of talk that Wall Street does want to support Robinhood to an extent because of that. Not to say that they want them to, like, they're going to make Robinhood rip higher every day, but they want to support the share price. So I just thought, so I want to see what Sundial is doing. Yeah, so that ended up being a pretty good exit on this. Although it did pop in the last hour. I got a little premature with my sell. I just wanted to exit it because I didn't want to think about it. But yeah, I got a little bit of a pop into the final hour when we exited. I mean, it was like 1% or 2%, so it wasn't a big deal. But I had no problem taking a stab at this. But that's why that's why it was just a one-day play. However, Aurora. So next month, I have this one on my radar. This is one I made a lot of money on call options last year. And if it gives me the right pattern going into earnings, I might take this one. But we're a little ways away. I don't think they report till like the middle of September. So we'll just keep an eye on that. But that one's on the radar. January 22. Yeah, I would. Yeah. I typically like to go like 6 months out. But that's all right. At the very least, we should get some volatility. Like, I'd say, I know this is like crazy, but worst case scenario by October. And I mean, we had a little bit of volatility last year, a year ago, and they're doing the same amount of QE now that they were then. So, and if anything, the pressure is on them to raise rates. That's another thing too. A lot of people haven't really thought about. They say like, oh, the Fed can't raise rates because it'll crash and blah, this and that. But what happens when the next crisis happens and they already have rates at zero? Then what do? So I think there's sort of pressure on them to potentially at least raise rates a quarter of a point, you know, for better or for worse, because they're going to have to do something. They're going to have bullets in the gun, right? All right. I'm going to wrap it up here. Thank you very much, guys, for coming out. Like, comment, subscribe. I really want to do the trading course, but, you know, I do want to do it for, you know, a decent, you know, I'm not going to like charge too much for it. Just because it's my first time and doing this stuff, and, you know, especially for you guys who've been following me, I don't want to charge you guys, you know, it's not going to be like some of those crazy ones that are like $700. I'm going to do way less than that. Not even close, actually. But at the same time, I do want to be at least like compensated for my time. And so I want to like at least have a decent following built up before we do that. But you know, I know I've been talking about it, but, you know, I haven't forgotten it. It's going to happen, but, maybe if I get to 500 or 1,000, you know, subscribers, we'll do something like that. But, yeah, thank you guys so much. Keep rocking it out. And yeah, we'll just keep trying to find some good trades for you. And, yeah, we'll see. Yeah, negative rate. No, they're not doing negative rates, Kevin. I don't think they are. I don't think they are. The ECB sucks, but, you know, they can do that. I don't think they're doing that here. But then, who knows? with all the amount of stuff that's happened in the last 18 months, who actually knows? Right, all right. Anyway, guys, take care. I'll talk to you later. Thank you so much.